Hey everyone, so the company I'm looking at today could be the cheapest of all the cannabis stocks so far. The price to sales ratio is 0.13. This is essentially assumed to be going out of business, so let's go see if there's an opportunity here. Air Wellness definitely isn't small. They're in 6 states with 85 store locations. The majority of those are in Florida, about 60 of those, so what's that? 20 left over for some of the other states, Pennsylvania being the second biggest one there, but mostly a Florida-based MSO. Now, if you are looking to invest in some of the cannabis stocks, I use interactive brokers to access over-the-counter markets. The link in the description below. I've got demo videos here on the channel if you want step-by-step on how to use the platforms. It's definitely the one that I recommend, and I personally use it. Okay, for Air Wellness, the previous CEO, John Sandelman, he handed over the leadership to an outsider, David Gobert. I don't know how to say his name. The company is in desperate need of a turnaround, essentially. So based on the research that I've done, I believe that they don't have any competitive advantage. I can't find anything interesting or unique about the business. And I can't imagine the culture is strong with the equity declining quite significantly. And the stock price has been getting belted. It was around $30 a share, and now it's less than $1 a share. And they're not profitable either. Now, if I look at some of their financial metrics, they've got gross margins below the industry average at about 40%, operating margin at negative 17%, so they're making an operating loss here. The market cap's sitting at about 60 million. The price of sales is 0.12 now. Negative EBIT because they're EBIT negative. I don't think there's anything unique about them. Regarding debt, the debt to equity is actually okay. Obviously, debt to EBITDA is going to be all messed up because they're not making any money. But then they've got high stock-based compensation. They've got low insider ownership. And another big one here is the intangibles to assets. They have over 50% of their balance sheet in their assets is tied up in licenses and goodwill, over 50%. And I think that that is a big issue for a lot of the MSOs where I don't think the licenses is worth anywhere near as much as they think they are. So I'll get to when I'm trying to value this in a moment. Now, on the positive side, yes, they did have a few positive quarters of cash flow. I just don't think this makes a big difference. I see this that they're in full turnaround mode, but there is some value I think I found. So let's talk about this value now. If I write down the intangibles to a more reasonable number, I used a typical store in Florida doing about, say, 3 million in revenues. Truly, for comparison, does like 6 to 8 million. And a shop should operate at, say, 10% margins. So that's therefore a store making around about $300,000 a year. And if I times that by the 80 stores that they have and then multiply that by a multiple, let's put it just a 5 times multiple for a private store in a competitive space, but it's profitable and stable and maybe they have reasonable customer retention. The reason I got to 5 times was I know that pharmacies, a pharmacy business in Australia is about 5 times its operating profit is about what it's worth to sell. Considering that's a very competitive environment as well, I'm just assuming it's around the same retail multiple. That would get us a number at about $120 million. That's what I think the value is. But the licenses I haven't factored in yet, and they're a bit tricky. This would be some extra value. I'm going to add another just $1 million per store. And even though licenses sold in other states, in some limited license areas, sold for 10 to 20 million, let's just call it 1 million per store for the license. That gives us to 80 million because they have 80 stores. Add the 80 million and 120 million together, and I could reduce the intangibles down to, I think, around 200 million. If we look at the equity of the business, I think it's somewhere around that 200 million mark. And that is, 3 times higher than the current market cap. So it is a distressed asset kind of play in my eyes. It's a turnaround. And do I want to be part of this turnaround? Well, no. Especially if they continue to bleed, this could all just disappear. It is more likely someone will come in and take them over, I think, and they'll see the assets the way I see it as some sort of value play. There is a little bit of hope out there for the business. They could either they turn the business around, find stability and stabilize that quickly declining equity number. If the rules were to change in Florida and adult use was to come in, that would save them, I think. That would just be a huge boon for anyone in Florida, and Air Wellness being a player in Florida, they would benefit greatly from that. Any of the other big catalysts, so like 280E removal, which is that onerous taxation on cannabis companies, essentially taxing their gross profit rather than their net profit, which means their expenses can't be written off, and that's just a huge disadvantage. Or safe banking gets changed, allowing traditional finance access and customers to use credit cards. Any of those bigger catalysts, those industry-wide catalysts, I think would rise all the ships. And I can see a scenario where the company, Air Wellness, would do extremely well in the stock market, even though they're struggling to turn the business around. That is kind of the beauty of the space. So now, if I was to think of this through, imagine then finding a company that are actually doing well and growing and they're profitable already. What's going to happen to these businesses if the catalysts don't happen? Well, they will still be good investments. The catalysts are just the upside rather than the main way to make any money. But with Air Wellness, I think the catalysts are the way to make the money here. And I don't think, well, you're not going to, the turnaround is very questionable at the moment. I just don't see it with Air Wellness. I don't see any competitive advantage. They haven't acquired well in the past. They haven't integrated well. I don't think they have any good brands. I worry about the culture as well. They have a lot of work to do, even if it is so optically cheap. I'm just going to stay out of this one. So the question is, where do they fit on my tier list? And well, unfortunately, Air Wellness, they're going to go right down the bottom of the D tier. I can't put them on the E tier. They're not completely like hopeless. They've got some assets there. They've got like, I think 200 million in intangibles. That it's valuable. And the market cap being at only 60 million, I see something there. There is a serious asset play there. And if they can turn the business around, like who knows, this could be a really successful investment for some people. And then you get some of those catalysts that come through that rise all the boats. Well, it's definitely not E. It's not an absolute, like it's got no chance. There's some chance there. I just think it's not that good of a business, and I just don't think I want to take anywhere near the risks that are associated with it. There are better businesses here in the space, and yeah, Air Wellness, they're going down in the D tier. They're going at the bottom of the D tier. I'll move it around if I want to put anyone else in there, but for now they're at the bottom of the list, and they're probably cheap for a reason. So anyway, I hope you've enjoyed my little tier list that I'm putting together. We've got a few more to come, and stay with me. We've got 5 more here to rank anyway, so it'll be interesting to see if I can get anyone up in the S or the A tier. So yeah, stay with me. I hope you're enjoying, and I'll see you in the next one.